Yo, appreciate your time and just know that I'm SK Crypto K, and today you should join my crypto club. Maybe by the end earn some dividends, so in advance I'ma thank you right now for that sub. Hey! Yo, let's go.
Hello everybody, welcome back to my channel. My name is SK Crypto K, and before we get started, allow me to preface everything by saying that I am not a financial advisor and these are for entertainment and educational purposes only. So folks, we have a special guest today and a really interesting project that the seed round is open for right now, and it is called Flex Perpetuals. And I have one of the team members, one of my good friends for a long time, CryptoStu, who I'm going to bring onto the stage right now, and then we'll get into this. If you guys have any questions, be sure to drop them and I will bring them up. If there's anything pertinent, we might sprinkle them throughout the live stream, or maybe hold them to the end. We'll see. So make sure you block out the next hour to an hour and a half, and we will see where this goes. But without further ado, let me bring up CryptoStu. What's up, man?
Yo. SK,
Hey.
how's it going?
It's going well, man. How you been? What's up?
Oh, good. Busy. Yeah, and you? Busy?
Yeah, always busy, man. Got the little 9-month-old running around. She's crazy. Well, crawling around, really. But yeah, it's amazing, man.
Yeah, how's that going? Enjoying fatherhood?
Yes, very much so, man. Very much so. But dude, I'm excited for this because you hit me up in DMs a while back about what you've been cooking up. And man, there's a lot of things to go over with this Flex Perpetuals, and how it's great for traders, great for people who just want passive income without trading. There's a lot going on, but why don't you just take a second and maybe just introduce yourself to the people, and then we'll get into the project.
Yeah, great. Thanks for having us today. For those that don't know me, I'm CryptoStu. I would imagine that a large part of your audience already know who I am, SK, through our dealings with several projects over the course of the last few years. But as I say, my name's CryptoStu. I am head of ops and business development at Flex Labs, and Flex Perpetuals is a Flex Labs project that we are launching. I've been in crypto for about 3 years now. And I've just recently, and I'm super excited about this, just recently taken the plunge into working in this space full time. And so I'm really excited about that. And Bill, the CEO of Flex Labs, he gave me the opportunity to join the team. And I'm really excited about what we have in store and the opportunities that we're going to bring to the space. Through Flex Perpetuals and beyond. And my back in operations, really, I've worked in the real world and as head of operations for a small to medium-sized business for the last 12 years or so, just helping grow that business from a very, very small family-run business up into a business turning over 6 million last year. So lots of experience in operations, and a really good understanding of DeFi, just through being a participant and a user of DeFi projects over the course of the last 3 years, and made a lot of friendships along the way, and really excited to be working in the space full time now. And that's me, really.
Dude, yeah, no, it's exciting stuff, man. And I know your pedigree for not only whipping up calculations and charts and stuff, but just the experience and what you've seen out there that works and doesn't work. And the fact that you've linked up with Bill. I've had conversations with this CEO of Flex, and guys, like, we are in good hands. I feel really good about this. That's why I want to share it with you guys. And I don't know if Bill will be able to join us today. He's got a link, and if he pops in, that's great. Otherwise, I think Stu's going to be able to handle this with no issues at all. So I'm going to go ahead and I'm going to bring up a page that is the white paper, and it's out there. You know, I've got it linked in the description below as well, so you can check that out at your leisure. But CryptoStu, you know, you have a screen share as well, so just let me know whenever you want to bring one up, right?
Sure.
And
Yep.
we could do that. But so this Flex Labs project, if you just want to kind of give a quick elevator pitch for the folks, what is it?
Yeah, so we're launching a perpetual derivatives exchange on the BaseChain. So essentially, a perp dex allows people to trade various different markets, whether it's crypto, forex, commodities, using leverage. So that's where it differs to like a traditional decentralized exchange. So the likes of PancakeSwap or Uniswap are a traditional exchange which have liquidity pools and that facilitate people to swap their tokens. So a perpetual futures derivative exchange allows people to do that but apply leverage to their trading. So it's bringing the futures market from centralized exchanges into this decentralized landscape. And there are various perp dexes out there on the market at the moment, and we'll probably touch on some of that as we go through the call today. But essentially, that is what we're launching. We're bringing perp dex trading, leverage trading to the BaseChain, and that's going to be happening over the course of the next few months as we progress through our launch schedule. And we have two main customer bases, essentially. We've got the traders, the people who want to go in and trade, whether that's, you know, short-term scalping using, you know, really high leverage, or whether it's more swing trading style using a bit lower leverage. And so we're capturing that trader market, but we also appeal to those that want a more passive approach, who are more experienced in providing liquidity, whether that's on dexes or, you know, doing concentrated liquidity. So there's two main client bases. There's the traders and there's liquidity providers, and we've got something for everyone in the perp dex.
Aha. All right. No, very good. And as far as what this Flex Perpetuals trading and liquidity providing goes, is this something you guys built from the ground up?
No. So we're partnering with and leveraging the technology of HMX. So HMX is a project, a perp dex on Aerodrome network. They're also on Blast network. They just fairly recently launched in Blast, actually. And we have had the opportunity and decided to partner with HMX to allow us to leverage their existing technology and bring that to the BaseChain. And there's a few reasons why we've gone down this route rather than building things from scratch. So you mentioned Bill, our CEO, earlier on. And just to give you a bit of background about Bill, so Bill is a successful business owner with multiple businesses, multiple successful businesses under his belt, past and present. He has experience in software. Him and our head developer actually built the back end to a very popular streaming service. We can't name the names because of NDAs, but you know, that's the background of Bill. He's also a really excellent trader. He's been in crypto for about 6 years now, and you know, just over the course of the last year, he's traded over $1 billion of volume. And the reason I tell you that, A, to give you a bit of backstory about, you know, a bit more insight into the team, and B, to help understand why we've decided to partner with HMX. So Bill has been trading for one of our other projects called Flex IRA, and we can talk more about that later as well. But over the course of that project, he's gone through various different trading platforms that he uses personally to trade his own personal funds and the protocol funds. From Level Finance on the Binance Smart Chain to MEXC, a centralized exchange, and HMX. And ultimately, HMX was the platform that he chose to put the majority of his volume through. And that was for a couple of different reasons. One, just the seamless execution on the HMX platform allowed or facilitated efficient trading. When you want to buy, you have the ability to buy. You don't come across problems and phantom wicks that stop you out randomly. It's a transparent trading platform that Bill has used and put a huge amount of volume through.
Nice.
And so we like HMX's overarching kind of strategy. So they have decided to keep trading fees as low as possible to incentivize traders to use their platform. And that then has resulted in higher APRs for the people who are on the platform providing liquidity. And that turns into this virtuous cycle where the more volume that traders put through, the more APR that the liquidity providers receive, and that supports further volume, etc., etc. And they've got a great track record in terms of platform uptime and stability. Their tech is industry leading, and they're always innovating. So they're always improving their product. And we got this opportunity to partner with HMX, and we decided to take it because it means that we don't have to spend millions of dollars in the process of developing the code from scratch, and that allows us to get speed to market, essentially, because we've identified that there's this opportunity on the BaseChain currently, but we need to snap that up quite quickly. So we want to move quickly, we want to move fast, and in order to do that, this partnership just made sense.
No, it sounds like it does. And I kind of like that aspect, right? So rather than build everything from scratch and you don't know how it's going to perform when it's out in the open and with exploits and whatnot, you chose, or Bill chose, to partner with HMX, a platform he's already been using. He's seen, as a trader himself, he knows the competitors to HMX. There's a reason why he likes what they do. And for you guys to partner with them, use their code, which is already battle tested. I've got the site pulled up right now. Just in the last year, they've had 31 billion in trading volume. I mean, these guys, look like they know what they're doing, and you're mimicking that success with this partnership for Flex Labs and this Flex Perps DEX. So this is really exciting. And for those who saw that the seed round is open, they are aiming to get $1.5 million or up until May 31st. But one of the reasons why this is important is because when you compare what HMX has done from the people that were in their seed round, even today, they're sitting up at about 14x. And I think you had a slide on that right here. But yeah, private round investors for HMX are up 14x. And if you guys are looking to mimic this success, this is one of those things you can look forward to. Now, there is vesting and some stuff that we can go over later, but I think this is an exciting opportunity for a really good passive income long-term play right here.
Yeah, and we were that was one of the other reasons that we were keen to do a partnership rather than building things from the ground up. Is Bill really believes in the ethos of community-driven projects, and if we were to have started this from scratch, we would have had to go out and try and get venture capitalists to invest to seed that. But because we have saved a huge amount in the early building stages in regards to fees, it means that we're able to give this seed opportunity out to everyday investors, people who follow you on YouTube, on your channel, SK, people who we know already, existing investors in the Flex ecosystem, and anyone else who is interested has the opportunity to get in at the ground level. And that just doesn't generally happen that much in this space. It's usually the big whales and the VCs that get in first, and then inevitably they want to make a profit and they dump on your head. So we feel that doing this as a community-driven seed investment means we're going to get a much fairer distribution of tokens, and no one or two or three massive holders have control over the supply.
No, I dig it. And one of the other things you had mentioned was that you see a really good opportunity on BaseChain. So where does HMX primarily reside right now? And why didn't they just say, hey, look at Base, and we're just going to go throw HMX over there? Is there any background information you can give on why the partnership made sense, why you guys are going to be taking over the BaseChain versus them? Anything you can share?
Yeah, I mean, so they currently they're predominantly on Aerodrome. They have launched on the Blast network, but with launching on a new network, you have to go out, you have to find new liquidity to get yourself started, and it's a lot of work. So although that we're partnering with HMX, there's still a huge amount of work that has to go into making this launch a reality. And so this was a much easier option for HMX to let us do that work for them. And they're obviously going to benefit from this partnership through revenue kickbacks that they get. We will benefit the HMX holders through airdrops that are built into our tokenomics as well. And so it makes sense from a perspective of it's going to allow us they're going to grow their revenue because of the fees that we're paying HMX as part of the partnership, and it's a much quicker way for them to be able to do it with less headaches, really. And so that ultimately is the reason why this partnership has gone ahead.
Yeah, absolutely. And with the screen that I have pulled up right now, do you want to explain some of the opportunity with Base and why you selected that over the others?
Yeah, I mean, so if you've been in this space over the course of the last 6 months, you'll probably be aware of the BaseChain, and it is gathering momentum. It is growing an amazing rate, just in terms of the amount of TVL that's flowing from other chains onto the BaseChain itself. And it's obviously backed by Coinbase, and so it's got this massive industry titan behind the BaseChain, and we're really excited about that. Yeah, Coinbase are doing a lot of work to make onboarding into crypto and DeFi much easier. They're building smart wallets, and we intend to be able to be interoperable with those smart wallets moving forward, because onboarding new people is what this space needs in general. And then, so why Base for us? Well, Aerodrome at the moment and Solana are the two leading chains when it comes to derivatives, and so, which is futures trading essentially. And you can see on the slide there, so there's 721 million TVL in the derivatives category on Aerodrome at the moment. The BaseChain, however, only has 27 million in TVL, and so we see that there's just this huge opportunity for Base to be able to catch up with Aerodrome. Even if it was to do half of that, if it was to get to half of the size of Aerodrome in terms of derivatives TVL, you're still looking at a huge over 10-15x worth of TVL growth just to get halfway there. So we see that there's BaseChain has got momentum behind it, and at the moment there's a bit of a focus on meme coins on the BaseChain, and there's only really a few serious projects on that chain, and we expect that is going to change, and we want to be one of those serious players in this space.
No, I dig it. You don't want to come out as a meme coin with no utility. You guys are all about utility. So that is really cool. And when you look at some of your competitors, I know you have a quick slide before we get into the tokenomics and stuff, but these 3 others that you list, are these specifically on BaseChain? Are these your direct competition when you launch?
Yeah, they're specifically on BaseChain. And when you look at the DeFi Llama, and you just look at the derivatives category on the BaseChain, and you compare that to the likes of the Aerodrome chain, the TDLs of these competitors are a fraction of what we see on Aerodrome. So those that are in that comparison slide that you were on a moment or two, they're the direct competition as it stands. Which is why we've included them in the pitch deck, and we feel that that slide there highlights our competitive edge on the BaseChain itself.
Yeah, it looks like for collateral, you guys offer Bitcoin and Ethereum outside of just the USDC that they do, and you have a leverage up to 100x for the people daring enough to do it. So
yeah,
cool.
there's the leverage is actually up to 1000x, but just not on the crypto market. So you can trade 4x up to 1000x. Not that I'm saying that's a good idea, but the facility is there for you to do so. But the main thing here is the fees. In terms of we're going to mimic HMX's approach to keeping fees as low as possible to incentivize trading volume, because that trading volume brings eyes to the protocol, and it also improves the APRs that people who are in our liquidity pools are earning, and that just attracts more TVL, and it's that virtuous cycle again.
Yeah. And so to touch upon futures trading real quick, because after this, I really want to highlight what you guys do as far as the easy button for just passive income liquidity providers. But the futures trading part, now I'm not a trader and I'm definitely not going to do futures trading, but if I had a willy-nilly $500 and I wanted to go in and just crank up that 100x leverage, right, and throw it into a play, there's huge upside for me, because basically I'm turning $500 into 50,000 in a way, right? And if the market's going my way and I'm going up, I'm borrowing from the Flex platform, and I will get paid out from the Flex platform if I win that trade. But then, am I correct in saying this, on the downswing, the only skin in the game I have is that 500 I put in. But if the market goes the wrong way, then I will just get liquidated of just my 500, right? And because of the 100x leverage, I'm on a very sensitive slope of how quickly I can get liquidated of that 500. Is that correct?
Yeah, absolutely. So if you put a 100x long on, for example, on Bitcoin, you're essentially trading with $50,000 worth, and if the price moves against you to whatever your liquidation level is, then your collateral's gone, essentially. So you don't lose any more than your collateral, but that can happen very quickly. The higher the leverage that you use, the less the market has to move against you to be liquidated.
Got it. Yep. No, I like it. So for any of those who are daring enough to try that, hey, good luck. But what's really cool about what you guys have is on this risk management tab to protect, not only the ecosystem, but then also, being able to pay out these winning trades, and then, the max utilization limit and stuff. So you guys borrowed, or this is all from HMX, basically, the tried and true system that does work for futures trading here. So is there anything you want to elaborate on this?
Yeah, I mean, and it ties into just what you've been saying there. So when people are using leverage, we have to have risk management has to be at the forefront of the design of the code, essentially, because with high leverage comes this opportunity that people could earn a huge amount if they time it right, if they get the market right. And so we've got to have these risk management strategies in place to make sure that no single trade or no group of trades can jeopardize the health of the underlying ecosystem. And so that's where these 7 risk management features come into play. And you're absolutely right. So this is what we're bringing in from HMX. This is their code, their experience that they have developed these 7 different risk management features. So you've got max utilization limits in there, which basically means that there's only so much of the LP that can be used. Otherwise, people won't be able to open trades because it gets to a level where the risk is too high to allow new trades to be opened at that stage. Auto deleveraging, if traders are in we will automatically close trades. If there's a risk to the LP, we'll automatically close trades, starting with the trades that are in the biggest amount of profit first, because they're the ones that are going to potentially jeopardize the health of the LP, which is in the Flex Perpetuals ecosystem is called FLP. That's the market making liquidity pool is the FLP. So all of these 7 different features are designed with a specific intention of making sure that LP remains healthy.
Okay, no, very good. And yeah, we don't have to go into detail on all of them. Just know, everybody who's listening, that there are mechanisms in the background that will protect the platform and your trades. Will close it out in a algorithmic way, prioritizing things that will protect the platform as well. So in regards to when people get in on the seed round, right? Can you go over the vesting schedule and what they're actually going to be earning at the end of the cycle? I think it's the FDX token, amongst some others that you have here. And this is where we can get into like the easy button, the passive plays for those who aren't traders and for those who don't want to do up to 100x leverage. Let's start diving into some of that.
Yeah, I mean, I think that the easy button play is really just getting into the seed round, because all you have to do for that is deposit USDT into the seed round, and then it's going to be staked on your behalf as per the vesting schedule. So as you can see on the slide that you've got in front of you at the moment, there's quite a few tokens within the ecosystem itself, but the FDX token is the main revenue share and governance token of the Flex Perpetuals platform. And when you take part in the seed round, what's going to happen is, depending on the amount of money that you deposit into the seed round, there's an allocation of 350,000 FDX tokens that have been allocated towards seed round investors. So depending on what our final raise is during this seed round will depend what the issuing price is of that FDX token. But the vesting schedule follows a process. So once we publicly launch, there will be a 6-month cliff where your tokens will be locked and they'll be staked on your behalf. And during that 6-month period, you will be earning a share of the revenue that the platform makes through the trading fees, the borrowing fees, liquidations. These are all distributed to various different parts of the ecosystem, including seed round investors who have their FDX locked. And then it'll go on a vesting schedule of 18 linearly over 18 months. You will get those tokens released to you as FDX. And the remaining, so let's say on month 7, so you've gone through the 6-month cliff, month 7, you get your first 18th of your FDX token. The remaining 17 18ths will remain staked and will remain earning revenue. And then the FDX that you've got is fully liquid, and then you can decide what you want to do with that FDX at that particular point. You can either pair it with ETH and be an LP provider. You can convert it to ESFDX, which is the escrowed version of the FDX token, which can also be staked in order to earn revenue. And it sounds like quite a complex ecosystem in terms of the tokens, but the main two tokens are the FDX and the FLP. That's really what underpins it all. The ESFDX is simply an escrowed version of the FDX token, and that is really, you can't buy the ESFDX token and you can't sell the ESFDX token. It's released through the community incentives part of the tokenomics, and we can have a look at that slide in a moment or two. But you have to earn ESFDX, and so that essentially creates this escrowed token that limits the circulating supply of FDX in the system, essentially. Getting lost for words there, but that's what it's designed to do. It's designed to limit the circulating supply.
Okay. So the primary two tokens are FDX and FLP. And then the escrowed version of FDX is something that cannot be bought or sold, or, you can't just whale in and whale out. That is something that as you're staking your FDX or FLP, however those are configured, you're earning ESFDX, correct?
Correct. And traders will also earn ESFDX purely and simply through using the platform and putting volume through the trading platform. So traders can earn ESFDX via the Flex trade credits, which is the token you see on the far right of your page, and stakers can earn ESFDX.
Okay, gotcha. Because these last two tokens right here, so the FP, which are just flex points, these are kind of like a reward incentive. So say I pair my FDX token with Ethereum and I provide liquidity with it and it's staked and I'm earning. The longer I have it staked and earning, I'm actually earning some more like multiplier points or like a reward FP point. Is that what that is?
Yeah, so the longer that you have your FDX ETH LP staked, the more FP points you will earn, which in turn essentially just boosts the amount of ESFDX and USDC, which is what the revenue is paid out as, that you're going to earn. But as soon as you unstake, you lose all the flex points that you've accrued, and those are burned. So it's incentivizing people keeping the money in that system for depth of liquidity. And as soon as you leave, you lose that bonus, essentially.
Got it. So this is more for the easy button liquidity provider stakers. And then the FTC token is specifically for the traders, right? As they're bringing in volume and what have you.
Absolutely. Yeah.
Okay. No, very cool. Is there a particular slide that you wanted to go over with the FTX FLP side of it?
I mean, this might be a good time for me to share my screen, because I've put up a little diagram that just kind of explains that the relationship between these tokens a bit more.
Sure.
All right.
Yeah, just find the present button and then share what you would like.
Okay, is that coming over to you now?
Yes, there it is. You are live.
Okay, so what we've got here is just a bit of a diagram that shows the flow of the tokens, essentially. So at the top here, we see the FDX token, and this is the FDX token that's allocated to seed round holders. Okay, so the seed round investors get this LFDX, which is a locked version of the FDX token. And as per the vesting and release schedule, that's going to be released to them as FDX. They'll then have the opportunity to either convert that FDX into ESFDX and stake that, or they can move over to the right here and they can pair it with ETH, which is going to be our liquidity is going to be hosted on Aerodrome Finance. So they can pair it with ETH on Aerodrome Finance, and they can then either stake that FDX ETH LP in our own platform, and that's going to be called STFDX LP, or they can decide to stake their FDX ETH on Aerodrome natively and earn Aero rewards instead. So that's our seed round holders, and this conversion into the escrowed version of FDX is exclusively available to seed round investors. That's not something that normal buyers of the FDX token are going to be able to do.
A quick question on the FDX from the seed round. So
yeah,
6-month cliff, then it starts to come out over the next 18 months after that at 1/18th per month. Is that like the 1/18th? So on month 7, are those FDX tokens then and only then put into the escrow FDX, or are we earning the whole time, like the 6 months and the 7th and all that?
You're earning the whole time. So soon as the full launch, full public launch, soon as people are trading real capital in the system, you're earning. And in actual fact, HMX seed round investors had, managed to get their return on investment for 100% of the capital they invested in the seed round through the yield alone that was earned during that initial cliff and
during the
then,
lockup and cliff. Wow, that's incredible. Yeah. So highlight that point real quick. So when we put into the seed, it's locked up. We're not seeing any tokens until month 7 at minimum, but we're still earning rewards as if they're already the escrowed FDX. They're earning the trading platform fees that you're earning rewards already.
Yeah, and you're earning those rewards as USDC. So, and then you can go and use that USDC wherever you want.
That is so cool. That is so cool. I think I missed that in our briefing earlier, but wow. I think that's incredibly bullish, and especially if we're mimicking the success of HMX and those seed round holders already earned 100% ROI before they even got their tokens unlocked, right? That is incredibly bullish. That is. And before you go on, I just wanted to throw this out there about Bill. He is an incredible trader. So I already have this feeling that, this platform is going to be successful because he's going to be trading on other platforms, bringing in revenue here. He's going to be doing things, trading on the Flex Perps decks as well. And we'll talk about the copy trading thing that'll be available. But yeah. I'm just excited, man. Continue.
It's really exciting, man. I this is the bit that really gets me excited because I'm not a trader myself. So the whole trading side of things, it's what provides the revenue for our platform. But really, it's this staking that is where I get excited because that's more my style of investing. It's passive. I don't have to monitor the charts for hours and hours every day. It's earning me passive income. It's the easy button, which is what I need essentially.
Yeah, no, that's really cool. Did I jump the gun with the copy trading thing? You want to talk about it now or later?
Yeah, well, I mean, I think that in the pitch deck we've got obviously the roadmap goes as far as the public launch, and that just shows us, we've got a beta testing. I mean, I'm going to stop sharing my screen again just now, and perhaps you can go back to the pitch deck.
Yeah, what page?
You want to move further down, I believe. Let me just have a look here. Yeah, page 19, second from the last. Yeah.
Yeah. Oh, yes.
So this isn't really a roadmap as such. This is just our launch schedule. So we haven't even reached this public open beta stage yet. So at the moment, our dev team is reviewing the code that has been provided to us from HMX, and we are going to be making a few minor tweaks to the way that the tokenomics are designed based on how HMX have done things. There's the Aerodrome emphasis and the strategy that we're going into with Aerodrome, which we can also talk about. But we expect to open up testnet within the next week to 2 weeks. I would say probably about 10 days from now. I don't want to put any hard dates in it, but that's roughly what we're aiming for. And then that is going to remain open for 4 to 8 weeks. So that gives us an opportunity to monitor things, to work on any improvements that need to be made. If there's any bugs that are found along the way, it gives us an opportunity to do that. We'll then have the token generation event, which is essentially, a fair public sale, fair auction, ensuring, that all participants achieve exactly the same price. And that's going to be at a higher price. We don't know the specific details yet, but that's going to be at a higher price than what the investors in the seed round get for each of their tokens. And then we're going to do the FLP boost or surge, as it's referred to. And that's really to bootstrap the market making liquidity pool. And then it's full scale launch. So we expect this all to happen within the next 2 to 3 months. And we're really quite excited about that timing, because we feel as if, the feeling is the Bitcoin halving is done. We're expecting a bit of a lull in the markets over the summer holidays, and then things to get super bullish, as we come out the back end of summer. And that's going to tie in really quite nicely with our launch schedule. And that's a long-winded way of saying that we haven't published the full roadmap yet, SK, but there are some things that we certainly have slated to go on there. So, and there's 3 that come to mind. So first is governance. Again, through the partnership with HMX, they have literally just released their governance strategy and their voting mechanism within the last week. And they just passed their first vote, which is really exciting. And we're actually coming up to the second vote, which is electing council members. And we're going to be pushing to get Bill elected on the HMX council. But that's a different story, but it's going to be useful to have his influence in there.
Oh yeah.
So we'll be able to launch with a fully working governance model. And then, so that's first thing on the roadmap. Then the other thing that we're really excited about is to develop vaults. And this is something that HMX don't do. And that's one of the beauties of this partnership, is we have full access to their code base, but we are able to innovate ourselves. And so we're going to be releasing, and we don't have a timeline for this yet, SK, because it will be quite a bit of development work that has to go on behind the scenes, but we're going to be doing copy trading essentially on the Flex Perps platform, which will allow people to view a leaderboard of traders and just copy. So, if you're looking for an easy button and you're not a trader, you can copy, the most successful traders on the platform.
Boom.
Through one of these vaults.
I love it.
Yeah.
So I imagine Bill will be on that leaderboard, and if we just want to give up some capital, it'll just automatically copy trade what Bill's doing. And I've seen that man work. And that dude is a beast, man. So that's going to be really cool. Just before you continue, a quick shout out to Quality Touch Painting in the chat. Thank you for being here. Peachy is also here. Mel B said, hey guys. And then also for you, Stu, Jeremy Lum says, Stu, this is awesome, buddy.
Yeah, some familiar names. This is great. Yeah, Jeremy, good to see you on. Peachai actually won one of our giveaways on Twitter the other day. So congratulations.
Oh, nice. Yeah. Hey, make
Yeah.
sure you guys are following Flex on Twitter. Like as Bill's doing trades and stuff, he's just giving away free money. You just got to throw in your wallet address, comment, repost, like. And I mean, this is happening nearly on a daily basis. So you can just walk away with like $100 for free. So
Yeah, I
pretty
think we, over the course of about 4 days, in fact, it was 3 days last week, we gave away $1,500 just from partial profits of Bill's personal trades. So, and that's just part of our marketing strategy. We're obviously we're brand new in terms of getting our name out there, and we really just want to grow people's awareness. And giveaways are a good way to do that.
Yeah, absolutely. Into crypto, shout out, brother. He's excited for this as well. And yeah, today, they're getting their name out there this week. I think this is one of the first AMAs. They've got rugs to riches. They got all sorts of things lined up, guys. So, and you're so incredibly early. I have to highlight that, guys, because we're looking at this roadmap. And I mean, just look, we're not even in the public open beta phase, but all in all, once all of this stuff on screen is gone through, I think we're looking at about maybe 2 months from today ish that we'll see the full scale launch. It's going to be really cool.
Yeah, and just to reiterate that, how you are super early, you don't get this opportunity very often as, as an everyday investor. If you're not an absolute whale or you're a venture capitalist, you probably don't get these opportunities very often. And to add to that, when you get in super early, there's usually a huge amount of risk because it's something that's untested. Whereas because we are leveraging and partnering with HMX, we're hitting the ground with a working platform, with a working model. And so the risk is much, much lower. And then we have the opportunity to build on those foundations. So just because it is the way it is at the moment with HMX doesn't mean that we will not innovate ourselves and make changes. And, we've got certain things in our mind at the moment that we want to change and adapt over time. But we think it's more important at this stage to launch with that working product and to have those strong foundations and build depth in our protocol owned liquidity, build depth in our liquidity pools, to provide a bit of stability in the FDX price, and raise our market cap and just get more eyes on the platform as a whole.
Yeah, absolutely. I'm going to jump over to the allocations page because Crispy just came in with a question. They say, hey, what is the seed round market cap, price per token offer, and what will be the launch market cap, price, supply? Is there a fixed supply? Thanks.
Yeah. Okay. So the price will it's very difficult to give you an exact figure for what that's going to be because it really does depend on how much is raised in this seed round. So essentially, we know that we've got 350,000 FDX tokens to give that are going to be allocated to this seed round. It's called the private sale in the allocation slide that you see in front of you. So it's that top line. So 7% of the total supply, which is 5 million, is going to be allocated to the seed round. So it really depends on whether we get 1 million or whether we get 1.5 million. That is going to have an impact on what our issuing price is. And ultimately, that's going to dictate what the market cap or FDV is going to be. And in terms of the launch price, again, it's difficult to give you specific figures, but it's going to be, it will be launching at, quite significantly higher price than what the seed round issuing price is. If you scroll to the bottom, SK, right down to the last slide, you'll see a bit more information here. So we're looking for a 1.5 million. If we get that 1.5 million, then based on the math that goes into working out what the issue price is, that would assume an issuing price of $4.28, which would be an FDV of 21.5 million. If we only raise 1 million, then that number is going to be slightly lower.
Mm-hmm. Okay, no, really good breakdown on that. So, Crispy, did that answer your question? Hopefully so.
Yeah, the last question he had, is it a fixed supply? Yeah, it's 5 million. So there's no inflation beyond that 5 million. And the ESFDX token, which on that slide there, you can see community incentives is allocated 45% of the overall supply, so 2.25 million. That is what is released as ESFDX, and that's given out to stakers. It's given out to traders who put volume through the ecosystem. And so that essentially, that token is 45% of the overall supply, and that limits the amount of circulating supply that there is out there.
Yeah, absolutely. Do you want to mention who's on the team? Some people might look at the percent allocation, 15%, and be like, "Oh God, like what's going on?" But it's a trusted team from what I hear, Bill and you included. But yeah, what else can you explain here?
Yeah, so well, part of that team allocation actually is part of the HMX partnership. So it's not all going to the team here. So a part of that 15% is a kickback to HMX, and that's part of the partnership agreement. And then in terms of who's on the team, so we've got a team of 7. There's Bill, who's the CEO. There's myself, and I'm, as I've mentioned, head of ops and business development and marketing. Then we've got Mike Dre, who a lot of you will probably be familiar with as well. Mike has a great reputation in the space, and he is our tokenomics guru. And he, Flex Labs is bigger than just Flex Perpetuals, and so he's our research analyst and investment strategy expert on the team. There's then 3 full-time devs. So everything is happening in-house in terms of back-end and front-end development. Yuri is the head developer and has actually been working with Bill for the last 16 years and was involved in the developing the software, the back-end software for the streaming service that I mentioned earlier on. So they've got a massive, a long-term relationship working together. Then there's two other devs. And we have Eve, who is responsible for, some of our sexy artwork that we've got that's out there, the pitch deck being one of those things. So, that's the team. 7 of us in the team.
Awesome.
Hope that helps.
Awesome. Yes, I think it did. Crispy says, I see. Thank you so much, fellas. So, and they were here on a previous project. They're like, just keep up the good projects that you promote, bud. Thank you, Crispy. Happy to have you here. Let's go over this spaghetti junction looking slide here, because you guys are doing something with protocol owned liquidity, and then where's all the revenue kind of split to? Do you want to touch on that?
Yeah, absolutely. So I think what's really key to highlight, and this, we've been around the block here in DeFi, SK, and I think we've all found ourselves in projects that sounded too good to be true, and then we realized that the yield just it was coming from thin air, and ultimately the token would either be inflated to infinity and it was worthless, or the whole thing just crumbles underneath you and everyone's left scraping pennies out of their wallets. This is a protocol that is actually generating revenue. So when traders trade in the protocol, they pay trading fees, they pay borrowing fees. If they get liquidated, then that is essentially counted as revenue for the protocol. And the way it works is our market making liquidity. So the FLP, basically that's where the traders get their collateral from, that they can use to leverage trade. And it takes a counter trade for every trade that the traders make. And if the trader wins, the LP loses, and if the trader loses, the LP wins. And so that's where this revenue comes from. And I'd love to give you some insight as to kind of the level of fees that HMX are earning at the moment, and we can have a look at that in a moment or two. But first of all, let's look at how those profits and how that revenue is distributed in the ecosystem. So one of the things that we are changing from the way that HMX have done things is we are really emphasizing protocol-owned liquidity. And having experienced, lots of projects over the last few years, the projects that have really managed to weather the bear market the best in the tough times are the ones that really focused on protocol-owned liquidity. Because without that liquidity, things are just super, super volatile, and it makes it very difficult for, larger holders to sell their tokens without completely crashing the price. So we really want to emphasize that protocol-owned liquidity. So 15% of all protocol revenue is going to be directed towards building our POL. Then there's the development fund, and that's 10% of the protocol revenue. So part of that will go towards the team, and some of that will be used in terms of developing the protocol and improvements and innovations. Then 45% of the revenue it's the bulk of the revenue goes to the liquidity providers who provide the market making liquidity. So they're paid that 45% as USDC, that they can claim at any time. And that's what's going to result in, pretty generous APRs in that if you decide to stake in that Flex LP, and your funds remain liquid in there. So there's no lockup in that Flex LP at all. You can go in and out at your leisure. And then 30% of the protocol revenue goes to ES FDX staking, and then our staked FDX LP, which is basically just our FDX ETH liquidity. And that's where the revenue.
And quickly to highlight on the Flex LP, where 45% of the protocol revenue goes to, this is where you had mentioned that those people doing leverage trades, this is where they're borrowing the funds out of. And if you guys remember earlier in the stream when we talked about, if these traders keep coming in and all they do is win, it's coming out of this Flex LP. But that's, again, where you have those 7 pillars of support that will protect it, where they close out, that way it's not at a detriment to that Flex LP. So yeah, just wanted to point that out. Really cool.
And I think it's also worthwhile to note as well at that point. So when you bring your assets into the FLP, I mean, the FLP sounds like a made up token, but it consists of BTC, ETH, and USDC. And so those assets are what are held in that FLP. So you're essentially, when you're staking in the FLP, you're holding BTC, ETH, and LP with exposure to traders' performance, essentially.
Yes.
And this is probably a good time to, if I share my screen and I can show you some of the HMX stats.
Sure. Go ahead and bring it on up. Jeremy Lum came back in and said, "Hey, Stu, please record this session with SK Crypto K, and my people from Singapore will be with Flex 100%.
Awesome. Good to hear, Jeremy.
Yeah.
Love the support.
They also say, share it with my people from Singapore and Malaysia for now. I will try my very best to build Flex. Yeah.
Great.
Pretty cool. All right,
So
you're on the stage.
Find the right part of, so this is HMX's June dashboard. As you can see, a huge amount of data available. And where this is the chart I was looking for. So this is what they call HLP, which is what we are going to be doing as FLP, but it's essentially going to be, a very similar thing. So you can see here, as BTC and ETH were growing in price, the FLP value, or the HLP value, was continuing to go up. And then as, over the last, couple of months, Bitcoin hasn't been quite as buoyant as we would have hoped, and ETH as well, and they've pulled back a little bit, and so you're seeing that reflect in the HLP. But what I think is really important to see here is that there isn't really if you were to lay this chart over a longer term BTC or ETH chart, you're not seeing a huge amount of divergence here from the price action that you're seeing in those underlying assets. And that shows how well the HLP risk management strategies work to make sure that the LP isn't under too much strain at any point. So we see a dip in the HLP value there, but that's predominantly as a result of, you know, the Bitcoin and Ethereum's price over the last couple of months. And then what's really also interesting to see are the APRs. So this is showing us the APRs of what stakers are earning inside that HLP, which is going to be our FLP. And you can see it fluctuates as it has to fluctuate because the revenue, the volume that's going through the protocol is going to be fluctuating. And, you know, that this is real revenue, so it's not a fixed rate. And that's ranging anywhere from sort of 30% APR up to 174, you know, the last to sort of 65% APR. So that really is the easy button, and the underlying assets are you know, BTC, ETH, and USDC. So it's a pretty good passive play, and that's actually, you know, one of my own investment strategies is to really utilize some of these market making LPs across various different perp dexes, because I really like the way that they're set up.
Yeah, absolutely. So a good expectation that APRs are going to remain pretty solid. And then just to reiterate that point, guys, if you guys get in on the seed, which I have my referral link down below if you want to help me out, and then you can tell your friends about the seed, you have your own referral link that you can give out to earn, I think, 3% of the incoming funds. But remember, while you're staked in the seed, folks, like, don't get scared away with the 6-month cliff and the 18-month vesting after that. You're earning the whole time USDC as a reward during all of those periods. And if, again, it follows the success of HMX, who they are partnered with, and that this tech is fundamentally based on, those private seed at HMX, they got 100% ROI on the rewards alone, but before the cliff and everything even ended, right? The vesting period. So really exciting passive income play. Continue, Stu.
Yeah, and I think I just wanted to pull this. So this is some of this is DeFi Llama, if people are familiar with it, a really good resource to kind of research the whole DeFi space. And one of your first questions today was, you know, why did you decide to partner with HMX? And I think this table sums it up. So GMX this is fees that the platform has earned over the course of the last 7 days. So GMX has earned 1.77 million in fees over the last 7 days. HMX 863,000. So, you know, we're talking really quite large amounts of money in terms of the fees, because remember, all of these fees are what go into the LPs and pay the rewards for people who are staking. But the reason that this is so significant is if I go onto this next page here and you look at the difference in TVL. So GMX has over 500 million in TVL, whereas we have to scroll down to find HMX here with only 26 million in TVL. So GMX has literally got sort of 20 times the TVL of HMX, but HMX is, you know, what's that, about 65% of the fees that they've generated in a week. And that to me is that's a project that has a winning strategy. You know, their TVL is much lower, but they're able to kind of compete with the big boys in terms of the fees that they're earning. And because the TVL is much smaller, it means that those fees are being distributed around a much smaller amount of TVL, and so the APRs for LP providers are much higher.
Wow. Yeah, that's an incredible stat. Oh my goodness. Okay. Yeah, I see why you guys partnered with HMX, man. They've got a winning formula. That is so cool.
Yeah,
Yeah.
absolutely.
Oh man. Okay, cool. Jeremy Lum came back in, said thank you, CryptoStu and SK Crypto K for this meeting. SK is not new to DeFi. CryptoStu and SK are experienced DeFi moon boys. Yeah. I don't know about moon boys, but yeah, we are experienced. Yeah, man.
I love it.
Love it. No, cool. Anything else you want to share on while you got your page up?
No, I don't think. I think the last thing that I really want to make sure that people are kind of aware of is how we're incorporating, I should say, Aerodrome finance into the way that we're launching, and it's been a really significant part in the design of the tokenomics, and I think that it's important that people that grasp why we have made certain decisions. And this is why we brought Mike Dre on, because of his experience working with tokenomics, and Mike's background is, in the real world is in investment banking, and has, a huge amount of experience in this space. And I know that you can attest to that as well,
Oh
SK,
yeah.
on Mike's experience with tokenomics. And so we wanted to get someone on the team who really was really strong. I know tokenomics to a certain degree. Bill also has an understanding, a really solid understanding of tokenomics, but I don't think that either of us would describe ourselves as experts in that area. And so we decided to bring Mike on. And one of the things that one of the changes that he made was this emphasis on protocol loan liquidity. And so Aerodrome has become quite a large part of our strategy, and why we feel that we're going to be really competitive in this landscape. So we are going to be allocating a certain amount of the protocol own liquidity into this Aerodrome FDX ETH LP. And we will be buying up Aero and locking it as VE Aero. And this is probably sounds like double Dutch to those who aren't familiar with the Aerodrome Finance platform, but essentially with VE Aero, we can incentivize votes, and which will basically incentivize people to stake our FDX ETH LP on the Aerodrome platform itself, so that they earn rewards in Aero. And the reason that that's significant is because we want to emphasize this depth of liquidity. We need to keep the APRs at a respectable level to make that attractive to existing holders, and to new holders, obviously. We want people to come in, and we want people to stake their liquidity in order to provide that depth of liquidity. So HMX, the way that they're set up is they've got the single asset staking for the HMX token. And that's all very well and good. And when you stake your HMX token, there's an indefinite lock with a 21-day cooling off period. But really, that's only providing a one-time benefit to the platform. So you're buying the token and you're locking it up. So that's great. You're not selling it, so there's absolutely a benefit there. However, what we're doing is we're encouraging people to provide liquidity and stake that LP, because that provides not only the benefit of the buying the FDX token in the first place, but it means that you've got that depth and liquidity to facilitate the swaps of FDX and ETH in the Aerodrome pool. And so, because we've got these two options, people can either stake it on our platform, or they can stake the LP natively on Aerodrome. It means that we boost the APRs in both those places. Because let's say we've got $1 million, just to keep the numbers nice and straightforward. Let's say we've got $1 million worth of LP. if 100% of that $1 million was staked in our platform, then the fees are diluted across all those holders. Now, if that $1 million, if 500,000 of that is staked in our platform and 500,000 of that is staked on the Aerodrome finance platform, it means that essentially our fees are being divided by only half the amount of money. And so the APRs are going to be much, much higher than they would be if everything was staked on our site. So we're allocating revenue, we're allocating part of the ecosystem emission schedule towards Aerodrome bribes, and that helps raise awareness of our token and our LP, and incentivizes people to stake on Aerodrome as well as staking on our own platform, so that essentially there are two attractive places to stake that FTX ETH LP, keeping the APRs elevated as much as possible.
Yeah, and I like it's kind of like a marketing play too, to incentivize people to be on the Aerodrome side, because if you stake over there, you're going to be earning the Aero token, which is bullish in its own right. But then also it's helping support, the APRs internally on the Flex platform. But then having it on Aerodrome also plays into the whole bribe situation, and how they do their things, to keep those APRs really high. So yeah, it's really cool. I'm happy that Mike Dre is on the team as well. And yeah, that's a really good play, because some of your profits and whatnot is going to be feeding into the Aerodrome play as well, and it's going to really be a billboard for your platform by capturing these people who love to see volume on Aerodrome and high APRs. So yeah, really good marketing play.
Yeah, I'm really excited about it. I think it was a genius move by Mike, and the rest of the team, when he introduced it to us, we just jumped at it.
Yeah, absolutely. And Into Crypto just jumped in and he says, I haven't been this pumped about a project since December of 2021. Bro, that's dope, man. So yeah, really exciting stuff here. I don't want to make this too much longer. We've got, an hour and 15 minutes under our belt. Stu, are there any final points we haven't hit yet?
No, I mean, I think that the last thing, I think we've covered pretty much that whole pitch deck. I think we've gone into lots of detail. The last few things that I would say are, make sure to follow us on Twitter, and I'm sure SK, you'll put those details in the content of the video here.
Yes.
So share us on Twitter. Follow us on Twitter. We are doing lots of giveaways, and we will be doing more giveaways. Chance to earn free money. So all you need to do normally is to like and comment and retweet. So there's an opportunity there to earn free money. Come into our Telegram, have a chat if you've got questions about what we've covered in today's AMA, because there is lots to get through. This isn't, just a super simple platform. However, it's pretty simple if you just want to stake your tokens and earn a passive income. It doesn't get much easier than that, to be honest. And, you're keeping everything liquid. It's far easier than, trying to deal with impermanent loss in a concentrated liquidity pool or something like that. So there is definitely an easy button there. And the final thing I would say is, as SK has said a few times, this is super early. You're getting the opportunity to earn in, or to get involved in a seed round of a platform that's launching. But the risk is so much less because we're launching with a working product that has been battle tested. For the last year, it's been battle tested without issue, and we get the benefit of the future HMX innovation. So I really think it's an excellent opportunity, and we think it's an excellent opportunity to get involved in the seed round. And as a little cherry on top, if you do become involved in the seed round, if you then share your link with your own network, you'll get a 3% referral incentive. You do have to have a referral link in order to be able to deposit, and SK will be able to share his link in the description, the video description below, to help support SK. And thanks for having us on the channel.
Oh, you damn right, CryptoStu, baby. Thanks, man.
Yeah. Well, okay, cool. So you got the final words there from Mr. CryptoStu. I think we're going to end it right there, folks. One last pinned comment here, but we had Jeremy say, hey, people, yes, although Flex ecosystem is a complex one, let us learn this Flex ecosystem together. This is so bullish. Yeah. So really cool. Jeremy, thank you for being here. And thank you for all the viewers, whether you're watching the replay of this, be sure to share this around. And man, it was a pleasure to be here with CryptoStu. So thank you for your time. I'm excited for this. I am more bullish on this after this conversation than before. Just awesome. The easy button, man, with the passive income play. You're modeling the success of HMX. Get in on the seed, folks. This is a very early position that you can take, and you have your referral reward, so you can share this with all of your loved ones and friends in DeFi, and show them this video. Show them the HMX comparisons, the 14x that they did. Hopefully we could even do half that and be great, right? And you might even earn all of your rewards, ROI, before you even get your vesting scheduled tokens coming out to you. So incredibly bullish no matter how you slice this protocol. And maybe in a future video we'll have Bill up here as well. I want you guys to meet this cat. He is incredible, and for him to be the CEO of this as an experienced winning trader, and I can't wait to sign up for his copy trading thing. It's gonna be so cool. But you're in good hands on this, so this is really cool. So anyways, folks, that is all that I have for this video. If you guys enjoyed it, then please smash that like button and hit that notification bell as well. And as always, until next time, folks, please stay safe out there, stay blessed, and make good choices with your crypto.
Thanks, SK. Thanks, everybody. We'll speak to you all soon.
Thank you, brother.